It's the proverbial snowball becoming a boulder as the stock market goes through the lows this session. We got an hour left in trading. I will tell you there's always intriguing movement, though, that's not caught with the averages. In tech, Apple and Microsoft, they continue to drift lower, but semiconductors have been strong all day. Software stocks act great. Here to help us go beneath the surface, Nicholas Wealth Management President David Nicholas. David, I just want to ask you your thoughts on this market. You know, I haven't sensed panic, but there's no doubt that buyers have backed away.
Yeah, you know, it's September. We're going into October. I really think some of this is just the malaise of the elections ahead of us. I think this should be expected going into the end of September, into October. I don't think the worst is behind us. So I still think we could see another 5% sell-off for the S&P 500. You got to watch the NASDAQ. It's trading at support or at a 10% level on the downside. So I still think the worst is not behind us, unfortunately, for the markets.
You know, it's interesting because this market all year long has been a stock picker's market. I know it's a cliche, but the fact is most publicly traded stocks have been down all year long, even when we were at record highs. So I think that's going to be the case, but it feels like maybe there's some new winners starting to emerge, right? I talked about the semis, software, particularly anything associated with cloud. Some of these retailers act well. Do you see anything like that on your radar?
Yeah, I mean, we've been looking for the rotation, and I thought we started to see it a little bit. So I think there's this tug and war going on between the stay-at-home plays and really some of the recovery plays as well. So I think the market is trying to work that out. So I'm not fully convinced which way this market is headed. But I think you can't go wrong in some of the names that have quality balance sheets, some of the names that we've seen increase on strength and earnings. But I still think the at-home play is still alive for 2020. I'm not quite convinced the rotation play is here just as of yet.
And by the same token, though, you do have some conservative ideas. You like Coke, you like UPS, you like Disney, you like the home builders. KBH was intriguing, had a blowout number, opened higher, and then it came down quickly. So you're still more on a conservative side, though, even as some of these bigger names look like they're getting pretty cheap and attractive?
I do. You know, this has been a year of quick returns, right? And I think for right now, investors have to be patient. If you're looking at a recovery play, even a company like Coke, I think it's a time where valuations and technicals really line up nicely. But Coke is a company that will do well in recovery. It's trading under, if you watch the breakout that happened in August, traded below $49 a share today. I think it's a good stock, quality earnings, 3% dividend, not a bad stock to look at.
No, it's not bad. Plus, they've been around for over 100 years. They'll be okay. Hey, David, you're okay too, my friend. Thank you very much, folks.